Welcome to the hard truth of the stock market. Many dream of financial freedom through investing, but the reality is far less glamorous. Despite the endless advice and countless strategies out there, a staggering 99% of investors fail to achieve lasting success. Why is that? Today, we'll break down the real reasons behind this sobering statistic and reveal the simple, yet challenging, path to becoming part of the successful 1%. Let's dive into what truly separates winners from the crowd, and why so many fall short, despite their best intentions. Success in the stock market is often portrayed as a matter of luck or secret formulas. In reality, it's simple in theory but incredibly difficult in practice. Many investors chase quick wins, hopping for overnight riches, only to find themselves disappointed. The truth is, building wealth through stocks requires more than just picking the right company or following the latest trend. It demands discipline, self-awareness, and a willingness to learn from mistakes. Let's explore why the basics are so hard to master, and why most people never make it past the starting line. But if the secret to stock market success could be summed up in just 3 words, it sounds almost too good to be true, but these words hold the key to lasting wealth. While they may seem basic, only a tiny fraction of investors truly live by them. The rest spend years chasing shortcuts, only to end up frustrated and poorer for it. In the next scenes, we'll break down each pillar and show you how they work together to create real, sustainable results. Get ready to rethink everything you thought you knew about investing. First pillar is knowledge. In the world of investing, knowledge is your compass. It helps you cut through the noise, ignore the hype, and focus on what truly matters. With the right knowledge, you can identify fundamentally strong companies and avoid costly mistakes. Without it, you're simply gambling, hoping for luck to save you. Building knowledge takes time, effort, and a willingness to keep learning, but it's the foundation upon which all successful investing is built. Let's see how knowledge shapes every decision you make in the market. Stock market is filled with distractions, news headlines, social media chatter, and endless opinions. Knowledge helps you filter out the noise and focus on facts. It allows you to analyze financial statements, understand business models, and recognize true value. Instead of reacting emotionally to every market swing, knowledgeable investors stay calm and make informed decisions. This ability to separate signal from noise is what sets successful investors apart from the rest. Let's look at how you can start building this crucial skill. Solid knowledge. You can spot companies with real potential. This means looking beyond flashy marketing or trending stocks and focusing on fundamentals. What does the company do? Is it profitable? Does it have a competitive edge? These are the questions that matter. By digging into annual reports, understanding industry trends, and evaluating management, you can make smarter choices. Knowledge empowers you to invest with confidence, knowing you're backing businesses that can stand the test of time. Without knowledge, investing becomes little more than gambling. Many people buy stocks based on tips, rumors, or gut feelings. This approach rarely ends well. Instead of building wealth, they often lose money and confidence. True investors treat the stock market as a business, not a casino. They do their homework, understand the risks, and make decisions based on evidence. If you want to avoid the fate of the 99%, commit to learning and never stop improving your understanding. Second pillar is courage. Even with the best knowledge, you need the guts to act when opportunity knocks. The stock market rewards those who can make bold moves when others hesitate. Courage means trusting your research, backing yourself, and investing a meaningful amount, not just dabbling. It's about overcoming fear and taking calculated risks. Let's explore how courage can make all the difference between missed chances and life-changing gains. Courage starts with trust in your own research and analysis. When you've done the work, it's important to back your findings, even if others disagree. The market is full of noise and conflicting opinions, but true investors stick to their convictions. This doesn't mean being stubborn. It means having the confidence to act on well-founded insights. Trusting your research is the first step toward making bold, profitable decisions. Backing yourself means believing in your ability to make good decisions. It's easy to second-guess or follow the crowd, especially when markets are volatile. But successful investors know that confidence, built on knowledge and preparation, is essential. When you back yourself, you're willing to take responsibility for your choices and learn from the outcomes. This mindset is what separates leaders from followers in the investing world. Courage isn't just about making any investment, it's about investing meaningfully. This means putting real capital behind your convictions, not just small amounts that won't move the needle. Of course, this should always be done with proper risk management. The point is, when you truly believe in an opportunity, you have to be willing to commit. This is how big returns are made and why so few achieve them. Fear is one of the biggest obstacles in investing. Markets are unpredictable, and losses are part of the game. Courage means facing these fears head-on and not letting them dictate your actions. Instead of panicking during downturns or hesitating when opportunities arise, courageous investors stay focused on their strategy. They understand that risk is unavoidable, but it can be managed. Let's see how you can build this kind of resilience. Every investment carries risk, but not all risks are equal. Courageous investors don't take reckless bets, they take calculated risks based on solid research. This means understanding the downside, preparing for different scenarios, and only investing what you can afford to lose. By taking smart risks, you give yourself the chance to earn outsized rewards while protecting your capital from catastrophic losses. Third pillar is patience. In a world obsessed with instant results, patience is a rare and powerful trait. The stock market rewards those who can wait, who understand that real wealth is built over years, not days. Patience means holding through market cycles, resisting the urge to sell at the first sign of trouble, and letting your investments grow. Let's explore why patience is the ultimate secret weapon for investors. Building wealth in the stock market is a marathon, not a sprint. Many investors get frustrated when they don't see immediate gains and end up making impulsive decisions. But the most successful investors know that compounding takes time. By staying invested and allowing your money to grow, you give yourself the best chance at achieving significant returns. Patience is what turns small beginnings into large fortunes. Markets go through cycles, ups and downs are inevitable. Patience means holding your investments even when things look bleak. It's easy to panic during downturns, but history shows that markets recover over time. By staying the course, you avoid locking in losses and give your portfolio a chance to bounce back. This long-term perspective is what separates patient investors from those who give up too soon. Short-term temptations are everywhere in the stock market. From hot stock tips to sudden price swings, it's easy to get distracted. Patience means resisting the urge to chase quick profits or react to every headline. Instead, you stick to your plan and focus on your long-term goals. This discipline is what allows your investments to reach their full potential. One of the hardest parts of investing is simply doing nothing, letting your investments grow. It's tempting to tinker, buy and sell, or try to time the market. But history shows that those who stay invested and let compounding work its magic come out ahead. Patience means trusting the process and giving your money the time it needs to multiply. Compounding is often called the eighth wonder of the world. It's the process where your returns generate even more returns over time. The longer you stay invested, the more powerful compounding becomes. This is why patience is so critical. Without it, you miss out on the exponential growth that comes from letting your investments work for you year after year. Despite knowing the importance of knowledge, courage, and patience, most investors still fail. Why? The answer lies in human nature. We're wired to seek instant gratification, avoid discomfort, and follow the crowd. These tendencies make it incredibly hard to stick to the three pillars, especially when emotions run high. Understanding these psychological traps is the first step to overcoming them. Desire for instant results is one of the biggest enemies of successful investing. Many people jump from one strategy to another, hopping for quick wins. This impatience leads to poor decisions and missed opportunities. The best investors understand that real wealth takes time and are willing to wait for their efforts to pay off. Breaking free from the instant gratification trap is essential for long-term success. Investing can be uncomfortable. Markets are unpredictable and losses are inevitable. Many investors sell at the first sign of trouble, trying to avoid pain. But discomfort is part of the process. The most successful investors learn to embrace uncertainty and stay the course, even when it feels difficult. This willingness to endure discomfort is what allows them to capture long-term gains. It's natural to want to fit in, especially when everyone else seems to be making money. But following the crowd rarely leads to success in the stock market. Trends come and go, and by the time most people jump in, it's often too late. The best investors think independently, trust their research, and make decisions based on facts, not fads. Emotions can wreak havoc on your investment decisions. Fear, greed, and excitement often lead to buying high and selling low. Successful investors recognize these emotions and learn to manage them. By sticking to a plan and focusing on long-term goals, you can avoid the costly mistakes that come from emotional investing. Discipline is the antidote to impulsive decisions. It means having a clear strategy and sticking to it, even when it's hard. This discipline is what allows you to ride out market volatility and stay focused on your goals. The most successful investors are those who can control their impulses and act with intention. Every investor makes mistakes, it's part of the journey. The key is to learn from them and improve over time. Instead of blaming the market or bad luck, successful investors analyze their errors and adjust their approach. This willingness to learn and adapt is what leads to long-term growth and resilience. The best investors never stop learning. They read, study, and seek out new information to stay ahead. Continuous improvement is what keeps you sharp and prepared for whatever the market throws your way. By making learning a lifelong habit, you give yourself the best chance at success. A strong foundation in investing is built on knowledge, courage, and patience. These pillars support every decision you make and help you weather the storms of the market. By focusing on these fundamentals, you create a solid base for long-term success. Let's see how you can start building your own foundation today. Good investing habits are the key to consistency. This means setting clear goals, tracking your progress, and reviewing your strategy regularly. By developing these habits, you make it easier to stick to your plan and avoid common pitfalls. Consistency is what turns small actions into big results over time. Tracking your progress is essential for staying on course. This means regularly reviewing your portfolio, analyzing your results, and making adjustments as needed. By keeping a close eye on your performance, you can identify what's working and what needs improvement. This proactive approach is what separates successful investors from those who drift aimlessly. No strategy is perfect forever. Markets change, and so should your approach. Regularly reviewing your strategy ensures that you stay aligned with your goals and adapt to new information. This flexibility is what allows you to thrive in any market environment. Setting realistic goals is crucial for staying motivated and focused. Instead of aiming for overnight riches, focus on achievable milestones. This approach keeps you grounded and helps you measure progress over time. Realistic goals provide direction and make it easier to stay disciplined. Every step forward is worth celebrating. Recognizing small wins keeps you motivated and reinforces good habits. Whether it's reaching a savings goal or sticking to your plan during a tough market, these victories add up over time. Celebrate your progress and use it as fuel to keep going. One of the best ways to improve is by learning from others. Study the habits and strategies of successful investors. Read books, watch interviews, and seek out mentors. By learning from those who have already achieved what you want, you can avoid common mistakes and accelerate your own growth. Humility is an underrated trait in investing. No one has all the answers, and the market can humble even the most experienced professionals. Staying humble means being open to new ideas, admitting when you're wrong, and always being willing to learn. This mindset keeps you adaptable and resilient. Overconfidence can be just as dangerous as fear. When things are going well, it's easy to believe you can't lose, but the market has a way of humbling everyone. Avoiding overconfidence means staying cautious, double-checking your assumptions, and never risking more than you can afford to lose. Managing your expectations is key to avoiding disappointment. The stock market is unpredictable, and not every investment will be a winner. By setting realistic expectations and focusing on the long term, you can avoid frustration and stay committed to your plan. Consistency is the secret ingredient to success. It's not about making one big move, but about making good decisions day after day. By sticking to your plan and applying the 3 pillars, knowledge, courage, and patience, you give yourself the best chance at lasting wealth. The market is always changing, and successful investors adapt with it. This means staying informed, being flexible, and adjusting your strategy as needed. By embracing change instead of resisting it, you stay ahead of the curve and ready for whatever comes next. Investing doesn't have to be a solo journey. Seeking support from mentors, peers, or investment groups can provide valuable insights and encouragement. By sharing experiences and learning together, you can stay motivated and make better decisions. Motivation can wane over time, especially during tough markets. Finding ways to stay inspired, whether through reading, setting new goals, or celebrating progress, keeps you moving forward. Remember, the journey to wealth is long, but every step counts. Let's recap the 3 pillars of stock market success: knowledge, courage, and patience. Each one plays a vital role in your journey. Knowledge guides your decisions, courage empowers you to act, and patience allows your investments to grow. Together, they form the foundation of lasting wealth. When you combine knowledge, courage, and patience, you unlock the true power of investing. Each pillar supports the others, creating a cycle of growth and improvement. By focusing on these fundamentals, you give yourself the best chance to join the top 1% of investors who achieve real, lasting success. Every investor's journey is unique, but the path to success is built on the same principles. By mastering knowledge, courage, and patience, you can navigate the ups and downs of the market with confidence. Remember, it's not about being perfect, it's about making progress, learning, and staying committed to your goals. In the end, knowledge shows you the right door, courage makes you step through it, and patience takes you to the finish line. The journey may be long and challenging, but the rewards are worth it. By embracing these 3 pillars, you can build lasting wealth and become part of the successful 1%. Your future in the stock market starts with a single step. Are you ready to take it?